Hey guys, welcome back to Evolve or Die. Today I'm doing a quick little update about our AHT play, Ashford Hospitality Trust. And I'm just going to give a little update about the forecast and my personal opinions on the conditions that are surrounding the hospitality sector with, economic recovery being propelled forward, as well as the 4th of July weekend coming up and the spread of the Delta COVID variant. So there's a few things I want to talk about today. So let's dive right in. I did make a previous video about Ashford Hospitality Trust. It is a REIT, a real estate investment trust. And we've talked about the benefits of investing in REITs. They're good diversification for your portfolio. They usually yield pretty high dividends, and they are a really good hedge against inflation, being that real estate doesn't move in direct correlation with the rest of the stock market. So just a little bit of background, AHT does have a market cap of just under 900 million. We have seen, like we spoke about, negative earnings and negative price per share and price over earnings. So this was because, as we can see here, there was a steep decline during the 2019 to 2020 year because of COVID. So we have seen a steep decline. And it is good to note that AHT has been trending downwards for quite some time prior to COVID. However, they are on a really good trajectory from what they've presented in their recovery economic plan to address the negative earnings and the debt that they've accumulated, as well as the amortization. So they are positioned for recovery. Their portfolio is very clear on a path forward to capitalize on the recovery. And here is a collection of the portfolio that makes up Ashford Hospitality Trust. Like we talked about, they are primarily dominant in the upper scale hospitality sector. So here we do have a list of all of the hotels that are within their portfolio, as well as the locations. And like we also talked about in a previous video, that part of their business model, part of their forecast is to only focus on where there are massive influxes of migration and massive influxes of traveling. So we see Atlanta, Oakland, California, Key West in Florida, Dallas, Texas, Arlington, Texas, Houston. So I will post the link down to the investor presentation and the access to their portfolio in the description down below. But I just kind of want to talk about what I am expecting in the upcoming quarters. Like we talked about, guys, they have had substantial declines over the past 5 years. You can see back here, back in 2015, they were trading just over $100 a share, and we have seen substantial declines. But taking into account all of the approaches that they're trying to take towards recovery, and we have seen an increase in performance over the month, the quarter, and this half of the year. And that's really exciting for me as an investor, because when I see these prices, I think right now we're sitting just below $5, which is a great buying opportunity. Remember, guys, this is a long hold for me. I do think it's going to be a good momentum play, being that the 4th of July is coming up as well. But this is going to be a long-term hold for me. And I'm expecting there to be a spike in momentum and volume because of the travel predictions that are estimated for this upcoming 4th of July. So we're seeing nearly 50 million Americans are expected to travel for the 4th of July weekend, and more than more than 90% increase from the amount of travel that we saw last year during COVID, because naturally there were travel bans and things of that nature. So this is really exciting because this is a great projection. It's a great signal that we're amidst economic recovery. Like the hospitality sector is going to be recovering. Like we talked about pre-COVID, the hospitality industry saw a 70% decline just because of COVID. Like when travel was suspended and people were afraid to go outside and lockdowns, regulations, and things like that, most of the hospitality sector took a beating. Like they were slaughtered in the market. So I'm really excited for this estimated projection for people traveling during the 4th of July. I do think it's going to be a great momentum play, but it's also a long-term hold for me. So I'm expecting this stock to reach double digits by the middle of next year, because like we talked about, they have been trending downwards for the past 5 years. So it is going to take some time for them to mitigate their debt, and it's going to take some time to recover their earnings, and it's going to take some time to recover their workforce. So I just wanted to give you guys a quick update about my updated forecast about how the performance of the stock is going to play out. And like I said, while we are really excited about the gaining momentum of resuming of traveling, there are also other confounding factors that I do have in the back of my head. This is not, scaring me away from the stock. This is not going to deter my long-term forecast for the price movement. However, there are some resurging fears surrounding COVID. There are talks of maybe reinforcing the mask mandates, and there are rumors of potential lockdowns again. So all of that being said, we are going to go over to one of the Webull screeners, and I just want to show you guys something quickly here. Based on 4 analysts' recommendations, 75% of those analysts believe this is a long hold, which is the same boat that I'm in. So in light of resuming traveling, this is great for the hospitality sector. However, with the also taking into account the spread of the surging COVID variant Delta, we might see a dip. We might see a dip in the upcoming months. However, it's going to be a great buying opportunity. I do think we're going to see this stock get beneath $3 before the year is over. But like I said, by the middle of next year, I do expect to see double digits. And of course, there are unknown factors. Like we don't have a fortune telling ball. We don't have like a crystal ball. So in light of the changing COVID variants, that does pose like an unknown risk in investing in the hospitality sector right now, because if we do see more lockdowns, if we do see, those reimposing of mandates because of the fear of COVID, we might see another rapid decline. We might see another drastic obliteration of the hospitality sector. But again, that's why this is a long-term hold, because like we talked about, guys, they are set up for great recovery. They're on a great trajectory for evolving to match the changing conditions of the world and adjusting their business model and their platform to, meet certain regulations regarding COVID, meeting their shareholders' expectations as well. So I just wanted to give you guys a quick update about, like I said, my forecast and my projections of where this stock is heading. And that pretty much sums up that. Like I said, I do think there's going to be a spike in price after the 4th of July weekend, just due to momentum and the influx of attention that we might see surrounding the stock. But again, guys, this is a long-term play for me, and I'm expecting really great recovery in the upcoming years. And some of our other plays that we've talked about on the channel, VUZI, we are down about 1% on the day to 1863, but for the week, we are still up. And let's see how we're doing in nano dimensions. Nano dimensions were down about 2% on the day, but on the week, we are also still up. Just a quick reminder, guys, I'm not holding any nano dimensions right now because I do expect once the cycle out of tech stocks goes back into growth stocks, I do expect to see nano dimensions trickle back down to the $4 range. I would like to see it get beneath $6 before I re-enter the position. As you can see here, some of the analysts think that it's overvalued at this time, which I also agree with, because I am, like I said, I'm waiting for the pullback so I can re-enter at a better cost average. And we have a 1-year target estimate here of $10. We've seen nano dimensions significantly above $10. In the past few months, we've seen nano dimensions hit a 52-week high of 1789. So nano dimensions definitely has the potential. We looked at ARK Invest's institutional buy-in. We've looked at BlackRock's buy-in. So they're on a great trajectory. They are always looking for acquisition opportunities and mitigating debt, deleveraging of debt. But I'm just waiting for, a better entry point for my financial approach, like for my personal needs. Everybody has different risk tolerance and different risk management. Like I said, just I personally am waiting for that pullback. And remember, guys, none of this is financial advice, and I'm not a financial advisor. But that pretty much sums up my video for today, guys. I just wanted to give you guys a little update about where I think the price targets are going to go regarding Ashford, because of the upcoming 4th of July weekend. We have 50 million people estimated to be traveling around the United States, and that's just Americans that will be traveling. That doesn't even take into account all of the people that are going to be traveling outside of the US. So yeah, guys, remember our book of the week is 48 Laws of Power by Robert Greene. And if you liked the video, be sure to hit the subscribe button down below, as well as the notification bell, so you can always be alerted when I post a video. And thank you so much, guys, and keep evolving.